Ramesh Kannan, who's the MD and promoter, Jairam Sampath, who's the whole-time director and CFO with us right now. Thanks so much, gentlemen, for taking time out. I'm just going to pose a question on the back of the news that the company signed that MOU with the Karnataka government for projects worth about 3,700 crores. Can you share with us details?
The company has signed this MOU, you are right. The project cost is coming to around 1,500 crores as far as OSAT is concerned in the phase 1. And in the phase 2 and 3 put together, another 1,500 crores. That is how 3,000 crores is coming. Further, on the PCB plan, the company is planning to put 400 crores in phase 1 and 350 crores in phase 2. That is how the total amount comes to around 3,750. Between phase 1 and phase 2, there is a year and a half gap, and between phase 2 and phase 3, there is another 8 months gap. We are very confident that this will take this company into the next level, and we have spoken to a couple of our customers, and they have given us what orders they want to give us and how we want to take this forward. If there's anything you want to...
Yeah, so the idea was that we wanted to draw out a somewhat medium-term plan for this investment, so that when the policy is still very robust, we take advantage of this policy and put up capacities. Because the essence of putting up new capacities in an area like OSAT is to have lower burden, and the government policy provides for that. And because of that, we have now firmed up the plan for the medium term. That is, there are 3 phases: phase 1, 2, and 3.
Right. The other thing I wanted to discuss is who are these clients with whom you have signed a contract? What products will you be manufacturing from this particular unit?
It is too early for me to tell you all those things. However, they are the 2 large semiconductor companies we have approached, and 3-4 are mid-size and smaller size. They are all planning to have Making in India program and distribute it in India.
So how will you fund this project specifically?
Decided yet, but obviously large-scale projects need equity to be infused, and we are considering all options to fund this particular thing, because there's a large number. And fortunately, the initial whatever little, let's say, recce that we have done, a lot of companies are interested in supporting our company into whatever projects that we are doing for expansion. So maybe sometime shortly we'll announce the exact mode of funding, but it includes obviously equity finance through investors and so on. So we'll finalize that shortly.
Added to that, government schemes are very good. As far as semiconductor, Government of India has got a semiconductor policy wherein 50% subsidy is there. The state also has got some contribution on that, on top of it. So all put together, we have cleared up the entire plan how to do, and we have discussed threadbare to get to the final stages.
Right. And now the government as well has taken steps to boost domestic manufacturing smart meters. So what is the portion of revenue coming from this segment, and any new bids that you've placed?
We are closely to around 5% of our business comes from energy meters. And I think going forward, it will only go up, because big numbers are being projected by all companies, and all of them are being fulfilled with contracts from the government side too. Over to you, JPS.
Yeah, absolutely. I think just supplementing this information, since the demand supply gap is large, we don't want to lose out wherever our strength point is. So we are approaching both contract manufacturing as well as ODM type of approach, so that of course we are a services company, so we don't have our own brand of products that we bid. So from this perspective, we'll do contract manufacturing, that is turnkey EMS, as well as ODM. And we are in touch with many people, and at appropriate time, I think this is picking up speed this year, especially after the initial implementation has been done by the government last year for smart meters. So you can see a lot of actions from us and our peer companies going forward.
Right. Jairam, your EBITDA margins have been the best, right? 15% in FY23 amongst your peers, given the diversified portfolio that you have. Which are the high margin segments for you, and will that then be the focus area for growth for you going forward as well?
Essentially, the margins are determined by 6 factors. One of them is, of course, whether our batch size is low volume or high volume. We typically work in low to medium volume batch sizes. We don't do mass manufacturing products, and hence the chances of margins being better is higher. The other thing is the criticality of products that we manufacture. As you know, we've also talked about for the ISRO's Chandrayaan 3, the thrusters had the DC-DC converters manufactured by us. So something like that. So critical products gain better margins. The third thing is complexity. We typically manufacture complex products, be it railway signaling for something like short distance track circuits for metros, or any of these other even electronics for electric vehicles or medical electronics or industrial. So we make high complex products. So complex products typically gain a little higher margins than simple products do.
So do you think 15% margins are sustainable, and what is your expectations for FY24?
Designed a system by bringing a lot of manufacturing efficiencies, by bringing in new systems. So we strongly believe by design this is achievable and sustainable.
Yeah. So no, absolutely right. And you see, our profitability comes from 2 sources. One is the nature of business, and the other is essentially the operating leverage, which kind of goes up and down depending on the additional investments we make for new business, etc. So that's why we are saying that 15% EBITDA is a kind of a floor that you could expect in a business like ours. We already have an order book for 3,000 crores, so that probably qualifies in terms of EBITDA number if you were to just project existing costs onto it. So yes, based on whatever available data we have, I think this with scaling up to, we'll be able to hit this 15% plus EBITDA.
Right. Jairam, as you were mentioning about the Chandrayaan 3, are there any more such aerospace and defense orders that you have in the pipeline, and how is it that you see this segment growing on from here onwards?
Yeah, so I'm not at liberty to tell you exactly what it is, but there are, suffice it to say that ISRO is going to play a big role in the world market for, let's say, space vehicles and satellites and so on. So they have done their stage 1, which was developing capability. They've completed stage 2, which is developing vendors. And now they have done the stage 3, like the booster rocket. They have landed on the south pole of moon, which is like a statement saying that, yes, I know exactly, we know exactly how to do these things. So the stage 4 will lead to a lot of expansions. I can't really say directly, but I think they are proposing to work with a few vendors with whom they have had strategic relationships in the past several years. And they have seen these vendors' performance and how these vendors operate. So we are happy to be one of them, and we really will feel it is a privilege to do whatever it is that they ask us to do.
So talking about the EV segment, which is 10 to 15% of your revenue, where do you see this the next couple of years, and how are you seeing more orders coming in this segment?
Yeah, this is one sector which we will be getting in a big way. Our EV sector will have large orders. We are working with the giants in this industry, and I'm sure and confident the days to come in, this will be one of the large components in my billion-dollar plan.
And just supplementing what Narkesh said just now, see, it's not just the vehicle electronics we are focusing on, we are also focusing on the infrastructure side. There are many projects going on in the company, developing the charging infrastructure, which also will require to be developed along with the population increase of the EVs in the field.
All right, gentlemen, appreciate your time and thank you so very much for joining us. Well, what do we have ahead of our